Okay. Good morning, friends. Welcome to the second lecture on salaries. In the last lecture, what we have done is we've seen the charging section. We've seen what salary means. We have seen some retirement benefits. We've seen profit in lieu of salary. Now we move on to the next important aspect, and that is perquisites. Before we begin, let me tell you, perquisite is one of the very important components of salary. Good morning, friends. The reason why perks are important is not just the second lecture on salary, but also from the point of view of employee and the employer. Generally, perks are like magnet, it attracts employee in an organization, and therefore a lot of times merely salary is not going to suffice the purpose of the employer of retaining an employee. So if at all an employer got to retain employee, he has to at times give in-kind or monetary benefits to the employees so that they are attracted towards the organization. So it is a sane HR policy to give away perquisites. Now these perks come in various forms. So like it could be in form of accommodation, rent-free accommodation, wherein a building, a house property is given to an employee for the purposes of his stay. Similarly, it could be in form of a concessional loan facility. It could be giving away a car, which is one of the very prevalent practice across the industry of giving away car to the employees. Similarly, giving away different fringe benefits like providing education to the children of the employee or transfer of asset to the employee, furniture, fixture, items of the daily households which are required by the employees, provided by the employer. Now these are all fringe benefits, and these benefits are nothing but perquisites. Now, these perquisites got to be taxed. But the problem is there is a deep problem here, because you don't have a value for this perquisite. The employer would incur cost. However, the cost may sometimes be known and sometimes it might not be known to the employer himself. And therefore, what should be taxed in the hands of the employee is not very clear. In order to circumvent that situation, we have got valuation rules for the perquisite. See, understand, it is only the value of the perquisites which can be taxed in the hands of the employee. Now, value is a very relative concept. It is quite, it is quite subjective also. Value to one may not be the value to another. And therefore, while taxing perquisite, we don't want subjectivity. And in order to do that, we have a specific rule. Rule 3 deals with valuation of perquisite. So all in-kind benefits got to be valued. See, whatever can be measured in terms of money exactly as it is would be easier, simpler to tax. But what if something is not measurable in terms of money? Like accommodation owned by the employer. Now, that house property is already owned by the employer. Finding out the value of that house property becomes difficult. So it is unlike lease where the employer has taken house property on lease. If he has taken it on lease, well, the value is known, because the rent would be paid by the employer to the landlord, and that is the fair value of the property. However, when it is owned, it becomes difficult to find out the actual value of that rent-free accommodation. And therefore, we have different valuation rules. So apart from the perquisites, the different types of perquisite that we have in form of rent-free accommodation or loans, car which is given to the employee, all this got to be valued and added to the total salary of the employee for the purposes of taxation. So you have to take the value of all these in-kind perquisite, add it to the salary of the employee, and there thereafter find out the taxable salary. Now not all perquisite is taxable. Some of them are partially exempt, some of them are partially taxable, some of them are entirely taxable. So let us take up an example. We start with rent-free accommodation, which is again one of the very, very prevalent practices across all the industries. Employers generally provide rent-free accommodation to the employees for the simple reason because most of the times employees do not belong to the place where they are working, and therefore accommodation got to be provided to them. Now, valuation is quite logical here. Let's take up an example. See here, we've got three kinds of houses. Three houses we've got here, 1, 2, and 3. Now, if the employer is providing the employee a basic house without any furniture, fixtures, etc., without any facility, an unfurnished accommodation, which is here in A furnished accommodation, a lavish accommodation is given by the employer to the employee, which is here in B. Or in C, what it does is he does not give a house as an accommodation, but the accommodation is given in a hotel. Now that is covered by C. Now what do you think would carry more value, whether it is the value of A, B or C? What is more valuable to the employee? See, we are talking of the employee here. It's the value in the eyes of the employee that is important for taxing it as perquisite. So what do you think is more valuable, whether it is A, B or C? Yes, just leave it into the comment box. Yes, whether it's A, B or C, what is more valuable in the order of its value? What do you think? Whether you know the valuation rules or whether you don't know the valuation rules, but here you can make an assessment of what is more valuable, whether it is A, B or C, in the increasing order. Yes, so yes, Shraddha says it's C. Vijay Shankar says it's B. So yes, B would be more valuable than A, and as Shraddha says, the most valuable would be C. The reason why you say that is because of the facilities. When an accommodation is unfurnished without any facility, the valuation of that property would be lesser. In contrast to an accommodation which is totally furnished, which has got all the facilities, and that would be more valuable. However, when accommodation is given in a hotel, it does not just give accommodation, but it also renders, there is a composite element to it, there is the service element to it, and that becomes more valuable than both the unfurnished as well as the furnished kind of an accommodation. And therefore it is C, which is most valuable because it has both the element of service as well as the accommodation. So yes, B would be more valuable than A, and C would be more valuable than B and A together, right? So that is one way of looking at the valuation aspect of rent-free accommodation. However, friends, let me tell you, that is not just the only aspect. Giving service, rendering service, more service in a hotel is provided than an accommodation simpliciter. But then, apart from that, the location where the accommodation is located, the place where the location, where the accommodation is located is also important. So if the accommodation is given in a small town, now whether that would be more valuable or whether it is, see, we'll take it by way of an example. If the accommodation is provided in a small village, and compare it to an accommodation which is given in a metropolitan. Now, what is more valuable, whether the accommodation in a village or an accommodation in a metropolitan? What is more valuable? So it is obviously, it is the accommodation which is provided in a metropolitan city, Mumbai or Delhi. The accommodation would be more valuable than if the accommodation is located in a small town, like say Bhusawal. Now that in that case, we are going to value the accommodation given by the employer to the employee in a small town, which would be lesser, the value would be lesser than accommodation in a big town. Now, quite logical. But sometimes what happens is accommodation is also provided at a remote facility. Now, this remote facility accommodation would be the least valuable, say on high seas. Now, there is no other alternative, and therefore, C would be the least valuable, and thereafter you have A, and thereafter you have B. So it depends on not only the kind of infrastructure that is provided by the employer to the employee, but also the place where the infrastructure is provided. So with this in background, we go to the first rule, Rule 3, Sub-Rule 1, to value rent-free accommodation. Let us check out the rent-free accommodation, how the valuation is done. So when you look at Rule 3, Sub-Rule 1, the value of rent-free accommodation provided by an employer to the employee. In case of a central government employee, when the employee is a central government employee, well, it is the license fee that is treated as perquisite. So you don't have any valuation rule. It is just a license fee that is taken as perquisite in case of government employee, because they are governed by rules and regulation, proper rules and regulation. Therefore, with government employee there is no specific limit, or there is no specific structure. It only says that the license fee as determined by the government would be taken as the value of perquisite, less the rent actually paid by the employee. So it is the rent actually paid, recovered from the employee, would be deducted. See, it is the benefit which is given to the employee which is going to be taxed. So if the employer is going to recover something, that is not going to be added as perquisite. You get my point? So that is about the unfurnished accommodation. We are dividing the accommodation into furnished and unfurnished. Unfurnished accommodation would carry lesser of the value. Furnished accommodation would carry more value. So in case of furnished accommodation, it is the license fee plus, so something is added, to the unfurnished accommodation. Add 10% per annum of the cost of furniture and fittings. Furniture and fixtures, whatever is given by the employer to the employee, 10% of the cost. So it is not the WDV, it is the cost of the asset, the actual cost of the asset. 10% of it is added as perquisite towards the furniture and fixtures. Or in case sometimes what happens is the employer takes furniture and fixtures on hire. He owns the house, but he takes the furniture, which is the movable asset there, on hire. In that case, it is the actual charges, higher charges paid by the employer that would be added as perquisite in the hands of the employee. However, in case of non-governmental employees or other employees, it depends on the place where the accommodation is situated. So if the accommodation is situated in a place with a population of about 25 lakhs or more, it is 15% of salary. 15% of salary would be treated as perquisite towards rent-free accommodation. Similarly, if it is located in a mid-sized town, 10 lakh to 25 lakhs, the valuation would be 10% of the salary. And in any other town, it would be 7.5% of salary. So you'll notice here that the limits have been set based on the capacity of the employee. So it is 15% of salary. So it's the salary that is going to determine the valuation. So if the salary of an employee is less, in that case, the perquisite element would also be less. So it's quite fair and equitable. If you look at it, 15% of salary in a place with 25 lakhs or more of population, 10 to 25 lakhs, 10% of salary, and any other town, it is 7.5% of salary. Now, how do you compute valuation of the furnished accommodation? Quite simple. It would be the value as determined for unfurnished accommodation. So believe, even if you are given furnished accommodation, assume that it is unfurnished, calculate the value based on the three limits that is given to you, 15, 10 and 7.5%, and add to that 10% per annum of cost of furniture and fitting. And if at all, if the furniture and fitting is not owned by the employer, in that case, it is the actual higher charges which is added to the value of perquisite, right? Now, what happens sometimes, accommodation is owned by the employer, sometimes it isn't. If it isn't, if the accommodation is not owned by the employer, but he has leased it out, in that case, it is the actual lease rental payable by the employer to the landlord. So, say for instance, the employer has taken a house on lease for 5,000 rupees per month. In that case, he would end up paying 60,000 rupees for the entire year. Now, that 60,000 rupees would become perquisite in the hands of the employee. However, there is another criterion. The criteria is actual lease rental that is paid by the employer or 15% of salary, whichever is less. So whichever is less, we're going with the least of the two. Lease rent actually paid or 15% of salary. In case of furnished accommodation, it is quite similar to the unfurnished element. Just you got to add the value of the furniture, which is taken at 10% per annum of the actual cost. Now this was all about whether accommodation is provided to the employee not in a hotel. If it is provided in a hotel, it not only includes the value of accommodation but also the value of services. As I told you, hotel provides composite nature of service, and therefore there the 15% of salary is increased to 24% of salary. So actual charges paid to the hotel by the employer or 24% of salary, that would become the benefit which is received by the employee for his accommodation in a hotel. However, friends, understand, sometimes accommodation is provided in a hotel for a very brief period, especially when the employee is transferred from one place to another. Now, when he is transferred from one place to another, he needs time to search for a new accommodation. And therefore, what has been given as a logical relief here is 15 days of accommodation in a hotel on account of transfer would not be treated as perquisite. So we are not going to treat 15 days of accommodation in a hotel as perquisite, only if it happens on account of transfer. But otherwise, any accommodation provided by the employer to the employee in a hotel would be added as perquisite in the hands of the employee. Similarly, logical exemption is also given in cases where the accommodation is provided at a very remote area. So like employers who are engaged in the business of mining, oil exploration project, where the site is executed, dam site. In that case, the employer have to give facility of residence to the employees because they are working in a very remote location. So whatever facility is given to such employees working in the remote location, provided it is less than 800 square feet, located at a distance of 8 kilometers or more from the municipal limit. So more than 8 kilometers from the municipal limit would only constitute a remote area, or if at all it is located 40 kilometers away from a town, with a population of 20,000, more than 20,000. So it should be located away from a big town. So that would be treated as a remote area again. So if the accommodation is temporary in nature, like say the oil rig, I gave you an example just now. Here it is a remote location, and if at all any accommodation is provided near to the oil rig or or the mining site, in that case no perquisite would be added in the hands of the employee, because employee has to stay there out of compulsion, right? And therefore there would be no perquisite. Similarly, sometimes what happens is an employee is transferred. Now when he is transferred, he holds the accommodation at the first place from where he is transferred, and he also takes a new accommodation in another place where he is actually transferred, right? So now he has got two accommodation. Now if in case of such two accommodation, what they say is, in case of a new posting, the old accommodation would not be added as perquisite. So perquisite of only one of the accommodation with lower value would be added for a period of 90 days. Up to 90 days, only one accommodation would be treated as perquisite, at the option of the assessee. So the option exercised by the assessee or the employee would always be choose the lower of the valuation. So with lower value up to 90 days. Post 90 days, both of them are going to be taxed. Then, as far as government employee on a deputation is concerned, there is an exception, and that exception is if the government employee is working in any other body or undertaking controlled by the government. So generally government employees work for the PSUs. Now if at all it is the case like that, perquisites should be calculated as if the accommodation is owned by the other body or the undertaking. So that is an exception, but otherwise, if you look at this, it is fairly logical. So unfurnished, furnished accommodation, very simple to calculate. As far as the government employee are concerned, it is the license fee, flat license fee, which is given by the government, that would be added as perquisite. Important feature here is what would constitute 15% of salary. It is 15% of salary. So what is salary? Now salary here would include all the all allowances, every cash incentive that is given, so bonus, commission, whatever. See, everything is going to be included except for DA, which does not form part of retirement benefit, or the allowances that are exempt. We've seen certain allowances are exempt in the hands of the assessee. Now those allowances are not going to be added. Similarly, the perquisites are not going to be added to the salary. So salary includes everything except for those allowances which are exempt, DA which does not form part of salary, and the value of perquisites. Because we are computing the value of perquisites, the valuation of perquisite would happen subsequently after you calculate HRA, and therefore value of perquisites is not included. So apart from that, all the monetary payments are included for the purposes of calculation of salary here, but then again, salary we saw in the first lecture, it is taxable on due or receipt basis, whichever is earlier. However, here salary got to be taken strictly on the basis of accrual. So it is not the arrears that you got to add, or if at all some advance salary is received by the employee, that is not going to to be taken into consideration. Now, so 15% of salary would be salary that is accrued for the period for which the accommodation is given, right? Let's take up an example and try and understand this. Before that, I just take up a few queries if you have it. Okay. What are remote areas? Well, I've already discussed. Remote area would be an area beyond 40 kilometers of a town with a population of 20,000. So if it is located in a very remote place where there is no basic habitation, In that case, it would be a remote area. So I hope you get it, Neha. Sorry, Nisha. Okay. Malvika, I'll just answer your query at the end of the lecture because it would be out of context to discuss gratuity at this point. Let's go and check the problem. So yes, Harry is appointed CEO of Hogwarts Limited, and he draws a salary of 10 lakh rupees. He is allotted rent-free accommodation. So here, salary is already given to us. We did not calculate salary. If at all we had to calculate salary, we have to take all the monetary benefits. So it would include bonus, commission, etc., etc. He is allotted rent-free accommodation at Mumbai on 1st of April 2020, which he occupies on 1st of October 2020, until which he prefers to stay with his uncle. Right? So you have to compute the value of rent-free accommodation chargeable to tax in the hands of Harry if Hogwarts pays a rent of rupees 5,000 per month. Now understand here, I'm giving you a very important concept, and that concept is as far as perquisites are concerned, if the benefit of the facility that is provided by the employer to the employee is not claimed by the employee, or it is not consumed by the employee, in that case, nothing could be added to his salary income. Here, what has happened is the accommodation was given to him, allotted to him on 1/4/2020. However, he did not occupy that accommodation. Now, once he doesn't occupy it, no benefit could flow from the employer to the employee. 1st of April to 30th of October. They get it, friends. So in that light, the accommodation is provided by Hogwarts, and a rent of rupees 5,000 per month is paid by Hogwarts. Right? So now here it is a rented premises. So for rented premises, what the rule says, Rule 3.1 says it is lower of the lease rental payable or 15% of salary. So lease rental, actual rental payable is, how much? Just compute. How much would be the actual lease rental payable or 15% of salary, whichever is less. Let's see who gives the answer. Well, Aishwarya, furnished accommodation where you've got furniture along with accommodation simpliciter. So you've got, when you look at furnished accommodation, it would have movable furniture like sofa or, cupboards or let's say television set. So that would be furnished accommodation. Jamil, accrual basis, well, it's not difficult to understand accrual, certainly. Accrual would mean whatever is due to you. It might not have been received, but whatever is due to you, that got to be taken into account. So 15% of salary here would mean salary which is actually accrued, which is your right. So you should have the right to receive that amount. Advance is something that is going to accrue subsequently in the time. However, what is accrued is the current year salary. So April to March, or generally, salary becomes due on the next day of the month. Now, in case of most of the employers, they make it due on the next day of the month, and therefore salary would be the accrual of salary would happen from February to March to February, March of the last previous year, and February of the current previous year. Yes, so yes, Shraddha says it's 30. Also says it is 30,000. Okay. So option D is a lot of people, they are saying it is option D, and it is indeed option D. Wonderful. So Shivangi, it isn't B, because see, I just discussed it. He did not occupy the house for the entire year, and therefore, his value of benefit would only be restricted to 6 months. So 6 months into 5,000, that is 30,000, would become his perquisite. 5 lakhs into 15% would mean 75,000. Now lower of 75,000 or 30,000. Therefore, we go with option D. Now it's quite logical. See here, even in case of lease, it is the actual lease rental paid by the employer or 15% of salary. Now, if had it not been 15% of salary, what would have happened? Let's assume that Hogwarts Limited gives Harry a house on Marine Lines in Mumbai. Right now, that is one of the most plush areas. The rent that would be paid would be in lakhs. Now, his salary would be lesser than the amount of rent paid by the employer. Now, it is not that, the employee is deriving that benefit from that particular, house which is located in a plush area. It is for the benefit of the employer that he has given, for the convenience of the employer that he has given him a flat at that particular location, so that the employee is accessible at all given point of time. And therefore, it is more of convenience of the employer also. So what is taken here is only 15% of salary. Let me just, let us take the second example. So in second example, look at this: value of rent-free accommodation chargeable in the hands of Harry if rent paid by Hogwarts Limited was rupees 50,000 per month. Now what happens? So rent paid is 6 lakh rupees for the entire year. Even if we consider it for 6 months, it would be 3 lakh rupees. Now whether you will go with option D, whether in this case you'll go with option D. Well, Aditya's salary should be taken on a month-on-month basis. So, yes. Oh, it is in this particular example, we have assumed that 10 lakh rupees is for per annum. Okay, Vijay Shankar says it's A, 75,000, and he's indeed right when he says A. So Mancha, it is not 1,50,000. Salary actually paid, rent actually paid by the employer for 6 months would be 3 lakh rupees. However, 15% of 5 lakh rupees would be taken as the value, right? So 15% of salary or rupees 3 lakh, whichever is less. So 75,000, right, Charu? Let's move on to the next question. Value of rent-free accommodation chargeable to tax in the hands of Harry if the house is owned by Hogwarts. Now here, where the house is located becomes important. Now it is located in Mumbai, and Mumbai, has a population of greater than 25 lakhs. So therefore, here the valuation would be 15% of salary. However, elsewhere it would be, had it been in a small location, small town, like say, for instance, Bhusawal, which is a population of 1 lakh. In that case, it would be nearly 7.5% of salary, right? So it's the occupation. When did he occupy it? He had occupied it from 1st of October. From 1st of October to 31st of March, he had drawn a salary of 5 lakhs. So 5 lakhs into 15%, that would be my value of perquisite. So yes, we go with option C here. Yes. Let's go to question 4. So now value of rent-free accommodation if Harry's provided an accommodation in Taj Hotel for which Hogwarts paid rupees 3 lakhs. 3 lakh rupees is paid in a hotel. Now, Harry is least concerned as to where his stay is, and therefore he do not stand to benefit by staying in a hotel directly. However, it is for the convenience of employer that Hogwarts had kept him in a hotel. Yet, since he is in receipt of some additional services, here the valuation would be 24% of salary. So it is 24% of salary or the amount actually paid to the hotel by the employer. So yes, where do we go? Which option should we be selecting? Yes. Great, Anirudh. It is indeed 2 lakh. No, it isn't 2 lakh 40,000. The accommodation is provided only from 1st of October 2020. Until then, he was staying with his uncle. We are taking salary only for 6 months, and 24% of 5 lakhs would mean 1,20,000, and we go ahead with 1,20,000. Look at this here, however. Value of rent-free accommodation if Hogwarts paid 1 lakh rupees for his stay. So in that case, it would be whether it would be 1 lakh or 1,20,000. No, 1 lakh or 1,20,000, whichever is less. So we go here with option B. So these are quite logical valuation rules. Look at this, very, very logical. It is dependent on the amount of salary that you earn, and therefore, it gives all the equity and it gives stability to the working. Else it would become so difficult to find out valuation. And therefore, we have a separate rule. Rule 3 governs all the valuation of perquisite. Let's move to the next concept. So sometimes, car is also provided by the employer. Now, when car is provided by the employer, well, you've got to value the car also. How do you value the car? In A, you've got a car. In B, you have got a cyber truck, and in C, you've got a car along with a driver. Now, what is more valuable here? Amongst A and B, what is more valuable? What do you think is more valuable? Which car, gives you more value as an employee? Yes, whether A or B, what gives you more value? So obviously now A is like Nano and B is like the Tesla Cybertruck. Now obviously it is the B that is going to give you more value, and that is it. You know the valuation rule now, and therefore as far as the valuation rule goes, they have made a distinction here, and they say that all cars with a cubic capacity of 1.6 liters, or 1600 cc. 1600 cc, greater than 1600 cc would be valued at a particular rate. Lesser than 1600 cc would be valued at a particular rate. Similarly, cars with an additional driver, so a cyber truck given along with a driver or chauffeur as they call it, Now that would again be more valuable. So we got to add something more to it. Let's take up the valuation rule. Understand the valuation rule, and you will find it extremely logical. Now this is, understand, this is taxable only in case of specified employee. I'll come to what specified employees are. However, for the time being, understand, motor car can, again, you can segregate it into two of the limbs. It can be either hired or owned by the employer himself, or it could be owned by the employee. So motor car is owned by the employee and maintenance expenses are borne by the employer. Now here there is some value in terms of perquisite which flows from the employer to the employee. Similarly, the motor car itself is owned by the employer and he gives it to the employee. A Tesla Cybertruck is given to the employee. He gets the value of not only the truck but also the repairs and maintenance thereof. Right. So first let us see the scenario where the motor car is owned or hired by the employer. Now it is owned by the employer, used by the employee. Now what is the use of the employee? If he uses that truck exclusively, if he uses the car exclusively for official purposes and he doesn't do anything else, he doesn't use it for personal purposes, in that case there can be no perquisite, entirely used for office. With a question of perquisite, there is no perquisite there. However, if he uses it entirely for personal purposes only, it is only for the personal use that he has taken that car. In that case, it is the expenditure, the actual expenditure of the employer on that particular car. So it is actual expenditure of employer including depreciation. It is the wear and tear of the car, that is also added to the perquisite, the value of perquisite in the hands of the employee, right? So it is the actual expenditure incurred on running and maintenance. So the fuel cost or the maintenance repairs cost with the employer bears, and in addition to that, even the wear and tear of the car, that is in the nature of depreciation, which would be added to the value of the car itself, the value of the perquisite, right? So 10% of the cost is added as depreciation towards wear and tear. Now what happens, with official duty, there is absolutely no confusion. There is no perquisite. With personal use, exclusive personal use, again, there is no confusion because it is the actual expenditure incurred by the employer that is going to be added in the hands of the employee. What happens is complexity arises when the car is used partly for personal and partly for official purposes. If that be so, in that case, we check who is going to meet the expenses of running and maintenance. So if running and maintenance expenses are borne by the employer, in that case, he not only gives the car, but he also gives the running and maintenance expenses. In comparison, if he only gives the car and running and maintenance expenses are borne by the employee, now what is more valuable? It is, when both car as well as running and maintenance is given by the employer, that would become more valuable. If you remove running and maintenance and put it onto the employee, what the employer has given is only car. This would be lesser of a value. And that is quite logical again. So when running and maintenance expenses are made by the employer and the car is also owned or hired by the employer, in that case, you have a further two distinction. One, if the cubic capacity of the car is up to 1.6 liters or 1600 cc. In that case, you take it as 1800 per month. For the months where the car is actually used by the employee, it would be 1800 rupees per month. And in case if at all it is greater than 1.6 liters. So Tata Nano would be lesser than 1.6 liters of cubic capacity. There it would be 1800 rupees per month. However, if at all it is a Cybertruck, it would be it would have more of more than 1600 cc of power, and that would be 2400 rupees per month. Right, so quite logical, 1800 rupees per month and 2400 rupees per month would be taken as value of perquisite in the hands of the employee. However, if the personal expenses if the repair and maintenance expense, for personal purposes are fully made by the employee, and the employer meets only the official expenses, in that case, the value of perquisite for a small car would be 600 rupees per month. For a big car that is greater than 1.6 liters of cubic capacity, it would be 900 rupees per month. So very, very logical, 1800 rupees per month, 2400 rupees per month. Don't ask me why 1800. But then when you look at 1800 and 2400, you understand the logic of it. Right? More bigger the car, more is the amount of perquisite. Now, this was where the employer owns or hires the car. However, if the car is owned by the employee, now only repairs and maintenance is made by the employer. In this case, the value of perquisite would always be lesser, right? And therefore, if the employee uses the personal car for exclusively official duty, in that case, if repair and maintenance are made by the employer, there is no value of perquisite involved. However, if it is partly used for personal purposes and partly for official purposes, in that case, we have again a distinction, and that is up to 1.6 liters of cubic capacity and above 1.6 liters of cubic capacity. So it is the actual expenditure of the employer towards the running and maintenance. See, whatever is incurred by the employer towards running and maintenance of the personal car of the employee would be taken as perquisite as reduced by. So what you're going to reduce? You're going to reduce, the official use. So official use is valued at 1800 rupees per month in case of a small car and 2400 rupees per month in case of a big car. So above 1.6 liters of cubic capacity, it is actual expenditure incurred by the employer less 2400 rupees per month. Right, so it is the official expenditure that is valued here and deducted out of the total running and maintenance expenditure to find out the personal element, and that personal element would become perquisite. Less if any amount is recovered from the employee. If at all there is some recovery from the employee by the employer, that would be reduced. So it is like unfurnished accommodation or furnished accommodation, where some amount is recovered from the employee as rent, that would be deducted, from the value of perquisite. So that is not benefit flowing from the employer to the employee, because that is recovered by the employer. Again, if it is not a car and if it is some other vehicle altogether, it could be a two-wheeler for that matter. So if it is an other vehicle which is owned by the employee and it is used partly for personal purposes and partly for official purposes, it is actual expenditure incurred by the employer as reduced by 900 rupees per month. So in case of a two-wheeler, right, a scooter, it would be 900 rupees that would be deducted. So if it is a car, it is 1800 or 2400. In case if it is a two-wheeler, it is 900 rupees per month that would be deducted from the value of perquisite. So do you get this? The value of motor car. Let's take up an example. Let's continue with the same thing here. Harry is provided with a cyber truck, a car with 2000 cc's. The cost of the car is 10 lakhs. So we've been given cost of the car. Now, if this would be important only and only if the car is used for personal purposes, for exclusively personal purposes. In that case, actual expenditure would also include the amount of depreciation, and therefore it is the cost of the car that assumes importance. The monthly expenses for maintenance are rupees 5,000, which is fully met by Hogwarts. Rupees 12,000 is recovered from Harry, right? Rupees 12,000 rupees is recovered from Harry. So let's check out. So value of car, if the cyber truck is owned by Harry and is used partly for private and partly for official use. Partly for private and partly for officials. The Cybertruck is owned by Harry. Look at this. So partly for, when it is owned by the employee, it is only the running and maintenance cost that is made by the employer. So it is here, Hogwarts is only incurring 5,000 rupees. Now, out of which you got to deduct the official element, which is 2,400 rupees per month. So just check it out. Yes, Nisha, you'll get it in this particular problem. What amount got to be reduced? All right, Aditi goes with 19,200, which is absolutely right. 19,200, let's check it out, how 19,200. See here, the car is owned by the employee and therefore there is no element of perquisite for car. Now, therefore, repairs and maintenance expenses is 5,000 rupees, 5,000 rupees per month, which is incurred by the employer, right? Employer is incurring only 5,000 rupees per month, that is 60,000 rupees is incurred by the employer. And out of the 60,000 rupees, what we got to do is we got to deduct 2,400 rupees per month because it is a car with more than 2,000 cc's of engine, and therefore 2,400 minus into 12, that is 31,200. 31,200 got to be deducted out of it. Now what remains here is, when you deduct 31,200, you have, just a second, 60,000 minus 31,200, that gives us 28,800. Now what Hogwarts had done, they have also recovered 12,000 rupees from Harry, towards his personal repairs and maintenance expense, and therefore his total perquisite would be 19,200, and that is option C. Do you get it? 60,000 is the total repairs and maintenance, out of which 31,200 got to be deducted towards official value of the car used. We have been given that value, 2,400 rupees per month. So we don't apply our mind why 2,400. It is 2,400 for a car above 1.6 liters of cubic capacity. And after that, what we do is we reduce the amount which is collected from Harry towards the maintenance of the car. So 19,200 is the correct answer. Let's go on to the next option. Value of car if it is used by Mrs. Jeannie, wife of Mr. Harry, for personal purposes. So if it is given to Harry entirely for personal purposes, what should be the amount of perquisite? Yes. In that case, you not only take the amount which is used, which is incurred by the employer for repairs and maintenance. For repairs and maintenance, they have incurred 60,000 rupees of expenditure. Add to that the amount of wear and tear of the Cybertruck, because car is now, let's assume the car is owned by Hogwarts. In that case, you have to use it, you add the value of the wear and tear also, which is 10% of the cost of the car, which is 1 lakh. Yeah, isn't it? 10 lakh rupees is the value of the car, cost of the car. 10% of that would be 1 lakh, so 1 lakh 60,000. Now out of 1 lakh 60,000, 12,000 rupees is recovered from the employee, and therefore A, A would be the answer. 1 lakh 48,000. Now, what if Hogwarts owns the car and the car is used partly for official and partly for private purposes? Now here there is a small catch which you got to be careful, which you should be careful about. I'll discuss it, but just try and give me the answer. What if the car is owned by the employer and it is used partly for personal purposes and partly for official purposes? Yes, Vijay Shankar, you're right. 19,200 got to be added in the earlier example. That is the amount of benefit flowing from the employer to the employee. Shaurya, 19,200 is 60,000 rupees of repairs and maintenance cost actually incurred, less 2,400 rupees per month. It is, since it is partly used for personal and partly for official purposes, 28,800 rupees is deducted, and 12,000 rupees is the actual amount which Harry had paid to the employer. No, it should be 19,200. Yes, Charu says, the current question, Charu says it is 28,800. That's the value of perquisite. Yes, it is indeed 28,800. That is the value of perquisite. See here, this piece of information that 12,000 rupees is recovered from Harry has got no absolutely no relevance, because when perquisite is computed in respect of a car which is owned by the employer, owned or hired by the employer, and is used for partly official and partly personal purposes, the valuation is simple, and it is, if the car is more than 1.6 liters of cubic capacity, 2,400 per month. Since in our example it is 2000 cc car, it would be 2,400 per month into 12, and that is 28,800. What has been recovered from the employee is not going to be deducted, right? So this is valuation of car. Now sometimes what happens is, car is given, not just a single car but multiple cars are given to the employee. In that case, at his option, he could choose one of the car as partly official and partly personal. Rest of them would be totally personal capacity, right? Then in case if the assessee claims that the car is used entirely for official purposes, in that case he had to keep a logbook. He got to maintain the record of journey, and the employer should give him a certificate, yeah, that confirming that the car is used only exclusively for official purposes and not for personal purposes. Generally, government employees who get cars, they can use it only for official purposes. So there it isn't a problem. Now, moving further, provision of services, when let's assume here what we have dealt with is two of the prerequisite. House is given, accommodation is given by the employer to the employee. Similarly, car is given by the employer to the employee, right? So now the employer has both the gadi as well as the bangla, right? Now, in addition to that, what he also gives him is helper. So now, if helpers are given in the nature of like watchman for the house or a gardener for the house, personal attendant, sweeper. Now, in that case, it is indeed perquisite. Now, don't mix it up with helper allowance. Helper allowance, which we have considered in the earlier lecture, if it is used for official purposes, if the helper is used for official purposes, only then would the allowance be exempt to the extent it is actually incurred. Here, these helpers in the nature of watchman, gardener, sweeper, etc., is given for personal purposes. So when a person is allotted for personal purposes, in that case, it would be the entire cost which the employer bears for giving these services to the employee would be treated as perquisite. So gardener, salary of the gardener paid by the employer. Now that is going to be perquisite in the hands of the employee. However, car services or supply for household consumption of gas, electricity, water, etc. These are taxable as perquisite only in case of specified employee. Now, who are these specified employees? So they say a director of a company is always going to be a specified employee. Similarly, an employee who holds substantial interest in the company would be a specified employee. Or an employee, now this is crucial, this is very important. Or an employee who has got salary income, income under the head salaries, excluding perquisite, excluding the value of all benefits and amenities, by way of monetary payments, which exceeds 50,000. So salary income under the head of salaries, except for the perquisites, if it exceeds 50,000 rupees, he is a specified employee. So virtually in all the cases, you will always find specified employee, right? Because nobody gets a salary of lesser than 50,000 these days, right? It's a very old limit that is set, not updated thereafter. But however, and therefore practically irrelevant, but then yes, theoretically it might be relevant. Theoretically, if an employee gets income under the head of salary of less than 50,000, in that case, all the perquisites which are covered by 3.2, that is car, again the provision of the services under Rule 3.3, Rule 3.4, that is not going to be taxable, in case of non-specified employee. It would be taxed only in case of specified employee. Now, specified employees are only three: director of the company, an employee who holds substantial interest, that is 20% or more of voting power, or an employee who gets salary exceeding rupees 50,000, right? So it is the cost of providing sweeper, personal attendant, gardener, watchman, etc. Similarly, if gas, electricity, water is provided by the employer to the employee, it is the cost of these utilities. So electricity bill paid by the employer, personal electricity bill paid by the employer on behalf of the employee, that is going to be taxed as perquisite. Right. So this is 3.3, Rule 3.3 and 3.4. Sometimes what happens is the employer himself generates electricity. Now in that case, it is the manufacturing cost of that electricity. Let's assume an employee of a electricity board company, electricity distribution company, he gets free electricity. Now it's the cost of manufacturing of that electricity which would become perquisite in the hands of the employee. Right. So if always remember this, if at all anything is paid by the employee to the employer in lieu of the benefit which is given, that would be reduced from the value of perquisite. So let's say the electricity cost which the employer bears is 5,000 rupees, and out of which 2,000 rupees is recovered from the employee, only 3,000 rupees would become value of perquisite in the hands of the employee. Then next is educational facility. Let's move on to the next set of perquisite, and that is educational facility. Now, as far as educational facility goes, you can segregate it into three parts. One is external institute, where the institute has got no relation with the employer, and it is a it operates on a principal to principal basis. So whatever the employer pays for providing educational facilities in that particular institute, which is independent of the employer, would be taken as perquisite. Now, who this educational facility could be given? In case of an employer, it could be given to the employer himself. In case of an employee, it could be given to the employee himself. Now, if it is given to the employee himself, the training cost of employee, well, that is not taken as perquisite. However, if the educational facility is given to any member of the household of the employee, in that case, it would be taken as perquisite. So, employee has got children, and children are given educational facility in a school which is not owned or managed by the employer. In that case, whatever school fees the employer is going to pay for the children of the employee, right? Now, the children of the employee are responsibility of the employee, and therefore it is going to be taxed as perquisite. So whatever is paid by the employer for the sake of education of the children or any other member of the household of the employee in an external institute is going to be perquisite. However, if the institute is owned by the employer himself, there are big employers who have great facilities for the employees. They also have schools, right, in the premises of the factory. Generally, the manufacturing hubs, they have all kinds of facility within the manufacturing compound. The reason being convenience. So it is both convenient for the employees as well as for the employer. And therefore, if the institute is owned by the employer, it is the cost of education in similar institute, in the similar locality. So if at all the school is owned by the employer, we'll have to check what is the cost of education in a similar school in the nearby locality. So once we come to know that, that would be added as perquisite in the hands of the employee. Similarly, if at all, there are sometimes tie-ups with schools by the employer. Tie-ups are made by the schools by the employer that yes, we keep our 100 seats reserved. We are going to pay you a lump sum amount, right? So let's assume Bajaj Auto has got a tie-up with DPS. Now, hypothetically assuming, I'm just giving you an example, wherein Bajaj Auto says that we need 100 seats in your school, and we are in the DPS, and we are going to pay you 40 lakh rupees. Now, in that case, again, it is the cost of education in similar institute, right? To a third party, whatever is given would be taken as, the value of perquisite in the hands of the employee. Now, these are educational facilities. We did see, while we were discussing allowances, we did see children education allowance, children hostel allowance. Now, that is distinct from providing of the facility itself. Allowance are fixed set of money which is given from the employer to the employee. In that case, we saw that 100 rupees per month per child, subject to a maximum of 2 children, is exempt, right, in case of educational allowance. However, here there is no such limit on the number of children, right? Whatever educational facility is provided by the employer to the employee or his member of household or his children, who are again member of household, would be treated as perquisite in the hands of the employee. How that is to be valued? It is the cost of education in the similar institute. Do you get this, friends, everybody? Then, so not includable if the value of child, see, remember here there is a exception, and the exception is if the value per child does not exceed 1000 rupees per month per child. You know, if the value does not exceed 1000 rupees per month per child, in that case there is no perquisite. So let's assume the cost of education in similar institute is 800 rupees per month only. In that case, nothing will be taxed in the hand of the employee, provided it is given to a child, you know, and not to other member of the household. Other member of the household could be like brother, dependent on the employee. Now, in that case, this 1000 rupees of an exemption is not available. Now again here, what if the value exceeds 1000 rupees? If it is 1001, well, the plain reading indicates if it is more than 1000, in that case, entire sum would become taxable. So 1001, entire 1001 would become taxable. However, some of the books have taken a view that it is only 1 rupee, the excess above rupees 1000, that would be taxed. Even in the module, if you if you look out for module, you'll find that an alternative view is given even in the module. However, as far as the problem solving is done, it is done as if 1000 rupees is the threshold limit and not the basic exemption limit, and entirely once the threshold is crossed, entirely it becomes taxable. Now whatever is recovered from the employee for providing education, that got to be, that would become that will not be perquisite, and that would be deducted out of the value of the perquisite. Right? So do you get this, friends, everybody? Now, the distinct feature here is that there is no restriction on the number of children. As in case of children education allowance, there was restriction. It was available only for 2 children. Here there is no such restriction. Then, similarly, Rule 3, Sub-Rule 6, employer with transport business. Now what happens here is sometimes employees who are engaged in transport business, transportation of people, goods, now they have to commute, and therefore for their benefit, the employer provides them travel from one place to another. Let's assume, the best example is the airlines. In case of airlines, the crew would move from one place to another, and again they would have to come back to India, right? And therefore they take up some other flight. Now the other flight ticket is taken by the employer. And if that happens, the cost of that other flight ticket may become perquisite. However, specific exemption is granted to employees of railway and airlines. That nothing is going to be taxed in case where the employer is engaged in the business of railways or airlines. However, in other cases, the value of perquisite for transport of passenger for personal purposes of the employee or any member of his household shall be the fair market value of such services being offered to public. Let's assume, an employee of a private fleet of buses, he goes on a vacation, and he's traveling for personal purposes. Now, no amount is recovered from him. If no amount is recovered from him, the fare that the employer has foregone would become the perquisite in the hands of the employee, right? Since he's traveling for personal purposes. Had he been traveling for official purposes, there is no question of perquisite. However, since he's traveling for personal purposes, the ticket of the employee himself or any member of the household, that would become perquisite in the hands of the employee. See, it is only because of the fact of employment, he has traveled for free, and therefore it becomes perquisite in the hands of the employee. Then, moving further, we have certain notified fringe benefits. We're going to check out 17.2 in a short while. What we are discussing now is only the valuation aspect. So Rule 3.7 gives us certain notified fringe benefits, which are going to be taxed in the hands of employee as perquisite. So what are the notified fringe benefits? One is interest-free or concessional loan. Now what is interest-free? See, you don't charge anything. You know, you give away accommodation for free, and you don't recover anything. That is free, rent-free accommodation. Or it could be concessional. You recover some part of it. Similarly, in case of employees of bigger organization, they get loans. Loans from the employer given to the employee. Either it is entirely free, interest-free, or it is given at a concessional rate. Now, how do you find out concession? What is the amount of concession? You know, you have to take some basis. So whether it is the weighted average cost of capital that got to be taken. So whether we should take a WACC of the employer. Now let's assume one of the employer has got a WACC of 15%. In fact, WACC is also quite subjective. You know, finding out cost of equity is hell of a job. So like one of them has got 15% of WACC, the other could have 10% of WACC, and therefore there would be too much of subjectivity involved. Hence, Rule 3.7 says, no, you don't go anywhere, go to the SBI, and whatever rates are prevailing in case of light loans, which is given to the employee here, the rate as on 1st of April for that kind of a facility provided by SBI would become the basis, you know. So if let's assume the employer has given employee a home loan at the rate of 6%, and SBI is offering as on 1st day of April of the previous year, home loan at 7.5%. In that case, 1.5% would become perquisite in the hands of the employee, right? Fair enough. We have got a basis which flows from State Bank of India. So the interest rate charged by State Bank of India on similar loan, right? For home loan, let's assume if the employer gives a car loan to the employee at the rate of, let's say, 5%, and SBI is charging a rate of 10% on car loans. In this case, 5% would become the value of perquisite. But however, 5% of what? So 5% of the maximum monthly outstanding balance. So it is the maximum outstanding monthly balance. Now what is maximum outstanding monthly balance? It means the balance outstanding as on the last day of each month. So you got to compute interest as per the guidelines provided in Rule 3, irrespective of whatever interest you are paying. Whatever way interest you are paying interest on a day-to-day basis. However, here they say interest got to be computed as on your balance on the last day. So if it is the last day balance that you got to take into consideration. So 12 months, 12 balances. Say for instance, you've got a loan for the entire year. In that case, you got to take 12 months of last day balances, multiply it by 7.5 or whatever the rate of SBI is, and whatever you have actually paid, that would be deducted out of the interest that is payable as per the SBI rate, right? So remaining would become perquisite. So do you get this, friends? However, there are a few exceptions. What are the exceptions? If the loan is given for specified diseases. Now, there are certain serious diseases like cancer or any surgery, etc. Now, those specified diseases given in Rule 3A would any loan given for such procedure, such medical procedure, that would not be termed as perquisite. So loan given for medical treatment of specified disease, not to be taken as perquisite. Similarly, small loans, where the aggregate value is less than up to 20,000 rupees, again no perquisite would come into play, because for 20,000 we don't have to do this much of an exercise. The sense of materiality prevails here. So 20,000 rupees up to 20,000 rupees of loan. Generally, banks have a habit of giving festive loans to their employees. So festival loans, small loans, no perquisite got to be computed, right? As far as the rates are concerned, they are provided on the SBI website. And if you visit the SBI website and just put in, just Google the rates as on the first day of the month SBI, and you'll get the rates, applicable rates in case of all categories of loan. So it is home loan. For home loan, they have given categories starting from ranging from 7.15 to 7.45. Education loan, it is 10.55 to 10.80. So it depends on what kind of loan you have given to the employee and what is the rate SBI prescribes. Whatever is the shortfall is going to be treated as your perquisite. If you have paid excess loan, if you have paid excess loan, in that case, if you have paid excess interest as an employee, in that case there is no question of perquisite. So let's assume here SBI prescribes 7.5% of interest for home loan, and you are paying, let's say, 10%. If you are paying 10%, in that case there is no question of perquisite, no benefit has flown. Then, so that is interest-free perquisite, interest-free loan and perquisite arising therefrom. Let's move to holidays. So if at all, an employee is given a holiday and the holiday is sponsored by the employer, in that case, that the cost of that holiday would become the perquisite in the hands of the employee. However, not always the employer gives holiday through an external facility. Sometimes he also owns the facility, especially bigger employers who have to give holidays to employees time and again. They own the facility. If at all it is owned by the employer himself, in that case it is the fair market value of the holiday which is given by the employer to the employee. However, in case it is given in an external facility, it is the actual cost incurred by the employer. So holidays basically are going to be taxed as perquisite. However, do not mix this with leave travel concession. As far as the leave travel concession is concerned, it is governed by 10 into bracket 5. We'll just check it out in a short while. However, understand here, what is perquisite? It is the personal tour, right? So it is not the official tour. Official tours are outside the ambit of perquisite. However, sometimes what an employee could do, he can take a member of a household on official tour. Now, an employer expends on the member of the household also. In that case, whatever expenditure is done on the member of the household would become perquisite in the hands of the employee. Let's assume, Virat takes Anushka on an official tour, right? Now, the actual expenditure that is incurred on Anushka would become, the perquisites in the hands of Virat. So that is, where the official tour has some personal element involved. Sometimes what happens is, it is official tour which is extended into personal tour, into a holiday. In that case, it is only the extended period during which official duties are not discharged would be treated as perquisite. So value is limited to expenses incurred in the extended stay, during that extended stay, as reduced by the amount actually recovered from the employee. So that goes without saying, whatever is recovered from the employee got to be reduced. That's fairly logical, right? So this is holiday expenses. However, friends, there is one exception, exemption which is given by way of a beneficial circular, circular number 4 of 2020, which says that if the holiday facility is owned and maintained by the employer, so it is owned facility and it is uniformly available to all the employees. So if it is uniformly available to all the employees, in that case, the value of such benefit would be exempt. So now, since they say that it is going to be exempt, it is going to be exempt provided the owned facility is available to all the employees uniformly, right? Let's move to, before we go on to the next set of prerequisite, we just check out LTC. Now, leave travel concession. For the sake of convenience, you've got holidays here, and we also have leave travel concession. In leave travel concession, what happens is, holidays involves stay, involves food. Holidays could involve other expenses. It is accommodation, traveling, etc., etc., everything. However, leave travel concession involves only traveling. So it's only this element which is under focus as far as 10.5 is concerned. So let's move to 10.5. Right, I'll just take you to 10, section 10, clause 5. Okay. So leave travel concession or assistance. Give me a second. Now here the value of travel concession or assistance received or due to an employee for himself and his family. Right. So it is given for employee himself or his family. So whatever concession is given in traveling or assistance that is provided by the employer. So even the assistance that is provided by the employer to the employee, including his family members, is going to be exempt subject to a few conditions. What are the conditions? It is in relation to travel in the because of the leave in at any place in India. So the travel should happen within India. If the travel happens outside India, nothing is going to be exempted. Everything is going to be taxed. All the assistance is going to be taxed as perquisite. However, if the travel happens in place within India, it is going to be exempted. The conditions are that it should be it should be by the journey should take place by the shortest route. So you're going to take the journey through the shortest route possible, within India. So like you have to travel within India, but what you do is you take a longer route. Let's say you want to go to Siliguri, Bagdogra, and what you do is you take a flight which moves from Calcutta to Bangkok and thereafter to Bagdogra. Now that is not the shortest route, and therefore that would not qualify for exemption under section 10.5. What is going to qualify as exemption here is only the amount that you spend on transport, right? Transportation or traveling during the holiday, right? So leave travel here will mean only the traveling expenses. So traveling expenses can take place by air or by other than air. So if it happens by air, it should be the maximum economy fare of a national carrier, right? So fare of Air India, which is the national carrier, not too long now, that won't be, but then maximum economy fare of the national carrier. Or if it happens by road or by rail, in that case, what is the amount exempt? If the origin and destination is not connected, if it is not connected by rail and some other public transport exists, it is the first class fare of the public transport. Right now, what is the other public transport that exists? We've got buses, right? And they are in the best possible condition, isn't it? There is not a single part of it that doesn't move. And therefore, first class of a public transport other than rail is no good. But then where it is not connected by rail and public transport system exists, it is the first class fare of the public transport. If it is not connected by rail and no public transport exists, there is no public transport, like buses are not there, or and tram or metros, it's not there. In that case, it is the first class AC rail fare for a similar distance. So it is the first class AC rail fare. What you got to compare is irrespective of how you travel by car or you travel by bullock cart. No, it doesn't matter. What you are eligible for is only first class AC rail fare, right? In case if it is connected by rail, there is no question, right? It would be the first class AC rail fare, that is the maximum entitlement. So if you don't travel by first class but you travel by third AC, in that case it is the third AC rail fare, which would become exempt, right? If you travel by air, it would be the economy fare. Now, they say that now this is not, this is not the end of it. So they say one, the journey should take place by the shortest route. If it takes by air, if you take the journey by air, it is the maximum economy fare of the national carrier that is going to be exempt. If you take it by rail, it is the first class AC rail fare. If you take it by other mode of transport, in that case also maximum entitlement would be the first class AC rail fare for the similar distance. If at all there is public transport that exists, in that case it would be the first class fare of that public transport. However, the maximum entitlement would be 2 journeys in a block of 4 years. Now here block of 4 years is 4 calendar years, right? So every block would start from January and end in December. So the last block of 4 years was 2018-2021. So the last block of 4 calendar years, it started from 1986 and the last one was 2018 to 2021, and the current block is 2022, sorry. The current block is 2022 to 2025. Now what they say is that what is going to be exempt is only 2 journeys in a block of 4 years. You can take up only 2 journeys maximum. You take up 10 journeys. However, what we are going to exempt is only 2 journeys, right? And if at all you do not take any of them, right, or you take only one out of 2, you take only one. So one would be carried over to the next block. So in this block, you can take up 3 journeys, provided the carryover should be utilized in the first year itself. That is 22 for a period beginning from January 22 to December 22. You should take up, the carryover part of the journey, right? Else it would not be carried over to the subsequent period. So that is unavailed journey. What maximum you can claim as exemption is only twice in a period of 4 calendar years. Similarly, as far as children is concerned, they say that exemption is not available for more than 2 children. So maximum 2 children can be claimed as exempt. The rail fare of 2 children maximum can be claimed as exempt, except where there are multiple births after 1 child, right? So only in case where there is like you have a child and there is a birth of a twin. In that case alone, there is exemption. So all the 3 children would get benefit of exemption. However, if already you've got a twin and thereafter there is another child, in that case, the third child won't get any benefit under section 10(5). So I've already explained you the concept of rollover here. So if you have any of the entitlements that you've not taken up, you have to take it up in the next block, the first year of the next block. Then, so now what is family? Here it is employee himself. So travel assistant for employee himself or any member of his family. So family here means spouse, children, dependent parents, brother and sister, right? Dependent on the assessee, right? So as far as the parent, brother, sister are concerned, there is an adjective that is dependent. So only in case of dependent parents, brother and sister would they form part of family of the assessee, right? So that is definition of family for 10(5). However, as far as the other rule goes, in rule 3 we have seen member of household. In that case, in case of member of household, the family is different. Member of household would also include servants. Servants who work in the house of the employee. So it is spouse of children, parents, servants and dependents. So all of them would become member of household. So wherever the term member of household is used, you have to take into account everything. But however, for the purposes of leave travel concession, it is a short family. And you get entitlement only for 2 children, right? So just remember that. So the distinction between, holiday expense and leave travel concession. So whatever is already governed by 10(5) would not again become perquisite under the head of holiday expense. So holiday expenses would, we have a contentious traveling expenses here, which could also fall under leave travel concession. If it does fall under leave travel concession, then it doesn't fall here. I hope you get it. Okay, next, let's go to the valuation of food. Value of free food and non-alcoholic beverages by employer to employee, right? So free, sometimes what happens is employer provides employee free food and beverages. Now, if the food and beverage is of the nature of tea and snacks, well, tea and snacks which is provided within the working hours, within the office premises, is completely exempt. It is not going to be taxed as perquisite. However, if at all vouchers are provided, sometimes what the employer does, the employer provides with voucher. In that case, if at all it is, if the benefit is provided within the business premises during working hours, right, and food is provided which is not in the nature of snacks or tea, in that case, or lunch or dinner is provided, let's say, during working hours, value up to ₹50 per meal, right? A classic 50 per meal is fully exempt. So anything beyond 50 rupees would become taxable. Then sometimes what happens is employer doesn't provide it within the business premises himself, but he provides provides free food and beverage in a eating joint and gives out a voucher. Let's say you get a voucher of McD and you go there and have food as an employee. You have some non-transferable vouchers. In that case also, value up to ₹50 per meal is going to be fully exempt. Now this 50 rupees is a threshold limit. However, there is a beneficial circular which says that this 50 rupees, 15/2001, circular 15/2001 says that this 50 rupees is not the threshold, but a kind of basic exemption, right? So if at all the meal value is 100 rupees, in that case only 50 rupees would become taxable and not the entire 100. However, section doesn't indicate so. If you read the bare section, it says anything in excess of 50 rupees would become taxable perquisite. So even if it is 51, entire 51 should become taxable perquisite. So that is how the problems in the module are solved. But however, there is an alternative view, and that alternative view is also equally possible because of the circular 15/2001. Now, as far as free food and beverages given in a remote area, if at all an employee is posted in a remote area, now he is not going to get food and beverages there. It is for the employer to provide him. So whatever food and beverage is provided during working hours to an employee by the employer in a remote area or an offshore site would become entirely exempt, provided it is provided during the working hours of the employee. Now, what is a remote area? It is an area which is 40 kilometers away from a town with a population not exceeding 20,000. So, if it is within a radius of 40 kilometers from a town with a population of 20,000, there would be no such exemption. However, if it is a very remote area where there is absolutely no population, no facilities available to the employee, in that case the employer got to provide it and there is no value of perquisite then. However, any other food or beverage provided would be fully taxable. Food allowance given to the employee, fully taxable, because that is the personal expenditure of the employee which is taken care of by the employer. So fully taxable, all the expenses that is incurred by the employer for the employee, that got to be taxed after reducing the amount which is actually recovered from the employee. Right? So do you get it? The food and the beverages. Next. Well, value of any gift or voucher or token in lieu. Sometimes the employer gives away gifts or vouchers are given to the employee or any of the member of the household. Nowadays, you've got a lot of e-shopping websites where what the employer does, he gives away gift coupons of those e-shopping websites. Now, those are all going to be taxed provided if the value is exceeding rupees 5,000 in aggregate during the year. Right? So, aggregate value should exceed 5,000, only then would it become taxable. Again, here also the view is 5,001 and entire 5,001 would become taxable. Below 5,000, 4,999 or entirely it will be taken as nil. However, again, the beneficial circular 15/2001, if you go by that, the wordings there would suggest that this is a basic exemption limit. So, like 5,001, only 1 rupee should become taxable. Again, an alternative view is possible. You got to check the module. In the module also, they have solved problems with both the views. So, they have given an alternative view in the module also. Right? So, we stick to that. But however, employer giving any gift to the employee is only exempt until rupees 5,000. Right? On the contrary, if he doesn't receive a gift in capacity of an employee, under section 56(2)(10), 50,000 rupees is the basic exemption limit. The limit is 50,000 there. Here it is only 5,000. So probably needs revision. Next. Expenses for credit card including add-on cards. So whatever expenses are incurred by the employee out of the credit card, and the employer pays the bill or employer reimburses the expenditure, that is going to be perquisite in the hands of the employee. Right? So employer gives away a credit card to the employee and tells him, you shop whatever you want to, within the limits provided in the card. Now whatever personal expenditure with the employee does from that card would become perquisite in his hands. However, if the expenditure is done for official purposes, wholly and exclusively for official purposes, in that case, if it is wholly and exclusively for official purposes, in that case, no perquisite would arise. However, details of such official expense got to be maintained, and a certificate confirming official expense should be provided whenever asked for. Right? So that is expenses on credit card. Similarly, expenses in a club. Right? So actual amount of expenditure incurred annual or periodical fee other than fees for corporate membership. So if at all, a membership fee of a club is borne by the employer on behalf of the employee, that fees will become perquisite in the hands of the employee. Other than corporate membership, if the membership is corporate in nature and available to all the employees, in that case, that will not form part of the amount of perquisite. Similarly, if the membership is for official purposes, exclusively for official purposes, again, that would not be part of perquisite. However, health, sports, or similar facility, uniformly provided by the to the employees by the employer would be kept out of this, would be kept out of the perquisites. Next. Now, use of movable asset belonging to or hired by an employer. See what happens, sometimes the employer provides for assets, items of furniture and fixture, for items of household equipment to the employee, and the employee is going to use it for personal purposes. Right? Most of the employees of the banking industry, they get furniture which is provided by the employer to the employee, right? And that furniture becomes, is capitalized in the books of the employer. However, it is used, exploited by the employee. Now, such exploitation of furniture and fixture of, car in rent-free accommodation, in case of rent-free accommodation, we have already dealt with furniture and fittings. 10% of the cost got to be added. In case of car, also we have seen the value of perquisite, right? But in case of other movable asset, like say the washing machine, or let's say a music system is given, or any other electronic equipment or item of some furniture which is not part of the accommodation. In that case, it is the 10. See, in that case, 10% of the actual cost of such movable asset would become perquisite in the hands of the employee. It is 10% per annum of the actual cost, right? So what you have to do here is you have to find out the prorated cost. See, sometimes unlike depreciation, when you talk of 10% depreciation, rate of depreciation, you provide it for the entire year. However, here it is 10% per annum of the actual cost. Now, let's assume an employee has got a particular item of movable asset in the last month. In that case, only 1 month perquisite would be added to his income and not the entire year. So 10% is for the entire year. You got to take only the prorated cost of the use of the movable asset, right? So that would be treated as perquisite. However, what is not perquisite? So here, if the movable asset is in the nature of laptop or computers, right, that is specifically excluded from perquisite, because you want the employees to work on, employer would want a laptop or a computer with the employee for better connectivity, right? And even they want the employee to work from home, right? Even they want the employee to work at their residence, when they are on leave. And hence computers and laptops are specifically excluded. In fact, they are more of a liability when you look at it from the perspective of the employee, right? The computers and laptops are given to them only for the convenience of employer. So no perquisite arises on laptop and computers, quite logical. However, if such movable assets are well, Aditi, we don't have any time for break. We are just going to continue today. I apologize for not giving a break today, but we have a lot of things to cover. Transfer of any movable asset belonging to the employer. If movable asset is given for use, we know it is 10% of the actual cost that is going to be treated as perquisite. However, sometimes what happens, the employer transfers the movable asset. So movable asset is transferred to the employee. In such case, what happens is you have to take up the cost of the asset as perquisite. So let's assume the employer had a laptop which he had bought for 1 lakh rupees, gives it to the employee, right? Now that 1 lakh rupees, he transfers the ownership to the employee. That 1 lakh rupees would become perquisite in the hands of the employee. However, you come to know about an additional information, and that additional information is the laptop is already used for 2 years. Now, once it is used for 2 years, whether the value will be 1 lakh, the answer is no, there is wear and tear. And therefore, they say that in case of computers and electronics, you got to take 50% of the WDV for each completed year, only completed year. Now here completed year would not mean completed previous year. It would be, say, let's assume the computer, the laptop continuing with our example was bought on 15th of May 15th of May 2019. In that case, completed year, first completed year would be 15th of May 2020. And next completed year would be 14th of May 2021, right? So that is completed year. So for each completed year, you got to take 50% of the WDV. Let's assume the cost is 1 lakh rupees and the transfer happens in December 21. In that case, what you got to do is 50% for the year 1920 and 50% for the year 2021. Now that happens on WDV, right? So you have to first find out the WDV of the first year, that is 1920, purchased on May 2019. first year is completed on 14th of May 2020. So I provide for 15% of a wear and tear allowance. So my WDV is 50,000 after the end of first year. Thereafter, again, I provide 25,000 of wear and tear. So 25,000 rupees would become my WDV in the year of sale. Now, if that laptop is transferred for, let's say, 20,000, WDV here is 25,000, transferred for 20,000, 5,000 rupees would become my perquisite. Now, if it is transferred for 30,000, there is no perquisite, absolutely. Right? So, cost of such asset as reduced by wear and tear allowance, 20% on WDV for motor car, 50% on WDV for computers and electronics. Electronics here would mean, laptop or computer accessories. Other asset, it is 10% of cost, right? So for first two, car and computer, C and C, it is WDV. For other than WDV, it is cost. Other than motor car and computer, it is 10% of cost. Do you get it? So it is got to be reduced by the amount recovered. I've already explained that. Then other benefits or amenities, services, right or privilege provided by the employer. So any other, this is the residuary clause here. All other fringe benefits which are given by the employer to the employee, you got to take cost of the employer under arm's length transaction. It is the cost borne by the employer. However, what is not going to be taxed is mobile expenses borne by the employer for the employee, telephone expenses. That is, the value is going to be taken as nil. Next is the ESOPs. Let's move on to the ESOPs. Rule 3A, section 17.2 VI, that is 6. Right? The value of ESOP. Now, what happens here? Generally, employers want the employees to stay in the organization, not move out of the organization too often. In order to inculcate that sense of ownership, what the employer does, employer allots the employee certain equity shares. Right now, by having those equity shares, what happens is the employee feels as if he's a part of the organization. And therefore, what happens is the employer allots equity shares to employee, and now that is done at a concessional rate. He gives away equity, however, at a concessional rate. Either it is free or at a concessional rate. The amount of concession which is granted, in comparison to the fair market value of such equity, would be perquisites in the hands of the employee. Understand? Let's take up an example of a bank. Let's say HDFC Bank. The fair market value of each share is 1,200 rupees as on the date. Now, HDFC Bank wants to give away equity to its employee. Right? So they, understand, had, either the employee, when the employer doesn't give too much of salary, he gives away in form of an equity. So it is share-based transaction. You all are, you would have read about it in accounts. So share-based transaction. Here he is providing equity in lieu of salary. Now this equity is perquisite. How? If at all the equity is allotted by HDFC Bank to its employee at 1,200 rupees only, the fair value is 1,200 rupees of equity, well, there is no concession, no relief to the employee, no benefit to the employee flows from the employer to the employee. However, if he provides this 1,200 rupees of shares at 500 rupees, now every employee would be keen to take it. The reason why he wants to take it is because he would buy it at 500 and sell it at 1,200 and gain and have a gain of 700. This is nothing but intangible benefit. Now, therefore, this 700 rupees got to be valued. What is the amount of benefit that an employee is getting out of allotment of such ESOPs, or the equity by the company is going to be, should be valued. How do you value it? Now understand again, HDFC Bank is a listed, the equity of HDFC Bank is listed onto recognized stock exchange. So therefore you will say that it should be the price as on the date of, whenever the ESOPs are given to him, the employee stock option, whenever the option is given to the employee, and he exercises that option, the date of the fair market value as on the date of exercise of such option should be taken at the fair market value. The listed price. The price on a recognized stock exchange is all available in public domain. So fair enough. Now what I will do is I will search for a recognized stock exchange which has the lowest rate, isn't it? So we as Indians have got a knack of finding out loopholes. So like we will search for a recognized stock exchange. There are multiple stock exchanges. So you've got BSE, NSE, now you've got Calcutta Stock Exchange, you've got Pune Stock Exchange. You'll search for a stock exchange which has the lowest price, right? Because you want to reduce the amount of benefit, right? Therefore, now since there should be no subjectivity, they go a step ahead and they say that you got to take that stock exchange which has the highest volume. Maximum trade has happened as on the date of exercise. So recognized stock exchange with the highest volume got to be taken as a basis to find out the fair market value. Now the problem is with the fair market value itself. See, before the ESOPs are granted, the fair market value could be a little high. You've all dealt with financial management, and in financial management you have something like a come right and X right price. Similar to that, you've got ESOPs. Once the ESOPs are allotted, if the magnitude of ESOP is quite high, heavy, what happens is there is a decline in price because there is an increase in supply. And therefore, the logic given in this particular rule for valuation is very, very good. They say it is the average of opening and the closing price. Opening would be X ESOP, closing would be, opening would be come ESOP and closing would be X ESOP, right? So opening and closing divided by 2 as on the date of exercise of ESOP, right? So quite logical. So it is the average of opening and closing. If at all there are multiple recognized stock exchange where it is listed, you got to take up that stock exchange which has the highest volume. Now it can so happen as on the date of exercise there is no trading absolutely, right? It is a Sunday on the date of your exercise. If that be so, if no trading has happened on any other recognized stock exchanges, you got to take up the closing price as on the closest date. There you don't take up average. You take the closing price as on the closest date preceding the exercise on a recognized stock exchange, right? So Friday, if Saturday and Sunday was holiday and you have exercised it on Sunday, you got to take up Friday, the closing price of Friday as the fair market value. Similarly, if there are multiple RAC available, in that case, you got to take one with the highest volume. So that is quite logical. Again, we take up that price which is more fair. Which would be more fair? The one which has got the highest volume, right? Now it is not always that the equity is listed on a stock exchange, especially in case of startups. The listing happens subsequently, and therefore when ESOPs are granted by startups or a budding emerging company, or in respect of securities which are not listed, in that case it got to be valued. The value is determined by a merchant banker. So they say the value as determined by a merchant banker, not older than 180 days. That the value should be not older than 180 days such value would be adopted as the fair market value, right? So I've already explained you what is the amount of perquisite involved in such ESOP. It is the fair market value minus the exercise price, Now, fair market value is taken for the date of exercise. However, taxability of ESOPs arise on the date on which the equity is actually allotted, right? So taxability doesn't arise until actual allotment of equity shares. You have exercised in the month of March. So 20th of March, you exercise your right for ESOP. However, the equity is allotted to you in the subsequent year, let's say on 5th of April. If it is so allotted on 5th of April, in that case, what happens is it will be taxed in the subsequent year, that is starting from April to March, right? However, the amount of perquisite is frozen as on 20th of March. We get this. See, there is a thin distinction. Exercise would have to precede allotment. So on the date of exercise, you crystallize your liability. On the date of allotment, what you do is you discharge your liability to pay tax, right? So it is, both of them are distinct. Both of them could be same also. On the date of exercise itself, if at all allotment is done, there is no question, there is no confusion then, right? So opening price is the sell price of the first settlement of the day, and closing price is the selling price as on the last settlement of the date, right? So this is all provided to you from the recognized stock exchange data. You can easily find out the first opening price and the closing price. As far as startups are concerned, there was a problem. And the problem was startups which are new, let's say Flipkart or Snapdeal, something like that. Now Snapdeal have given ESOPs to its employees. Now those ESOPs are into its very primitive stage. The equity is into its very primitive stage. And therefore, the employees might not want to sell the equity or might not be able to reap the benefit of the ESOPs immediately. And therefore, if I tax it in the year of entitlement or allotment itself, what could happen? The employee would not want to exercise his option of taking shares because they cannot be sold into, readily sold into markets. Because see, at the end of it, the benefit has accrued and I got to pay tax onto the benefit. However, if I cannot encash the benefit, I cannot also pay the tax onto it. Therefore, there was a practical difficulty in case of new enterprises like the startups. In order to take care of such event, what they said is in the by the Finance Act of 2020, the amendment was brought in when they said that in case of startups, eligible startups which are covered by 80 IAC, so they are into innovation, the generation of employment, ESOPs would be taxed in the hands of employee. The benefit accruing on account of entitlement of ESOP would be taxed in the hands of employee after 4 years from the end of the assessment year in which ESOPs was allotted, right? So an employee gets 4 years time, 4 years time from the end of the assessment year. So essentially gets 5 years, from the last day of the previous year to tax the ESOP. Or if he actually sells it, before the end of 4 years, if he actually sells it, he is allotted ESOP and he sells it tomorrow itself. So it should be taxed tomorrow, right? But if he doesn't sell it, we give him 4 years from the end of the assessment year, essentially 5 years, or date of actual sale, or date of ceasing to be an employee of the startup, right? Whichever is earlier. So whatever happens earlier, we are going to tax it at that point. So if the employee is the employee of the startup for a considerable period of time, let's say he continues for 10 years, we are going to tax it after 4 years from the end of the assessment year. Now the question is, at what rate are we going to tax it? So we are going to tax it at the rate applicable to the previous year in which the shares were allotted, right? So let's assume if the shares were allotted in 2020-21, we are going to tax it at the rate that prevails now. If he happens to sell it in 2022-23, right? In that case, tax would have to be paid in previous year 22-23. That is assessment year 23-24, right? However, the rate of tax would be taken as of which is applicable to the previous year, right? Do you get this, friends? So ESOP for eligible startups. Okay, let's move on to the, well, we have already discussed member of the household. We have already discussed salary. Salary for the purposes of perquisite would mean everything except for perquisite and DA not forming part of retirement benefit or employer's contribution to provident fund. We understand that. So we have already dealt with both rent-free accommodation and concessional accommodation. So nothing more to be explained again in this case. However, we have a wonderful diagram here. You can just go through it. I've given a chart. Just refer it in the video. Then we have already dealt with employee with substantial interest. An employee with substantial interest or a director or an employee who earns a salary of more than exceeding rupees 50,000 is a specified employee. Certain benefits or amenities which are granted free or at concessional rate are taxable only in case of such specified employees. So we discussed, while we discussed those non-monetary benefits, we have discussed what is taxable only in the hands of specified employee, right? So generally, I've seen a problem that comes, with a distinction in relation to perquisite arising under section 17.2.3. 17.2 item 3 versus 17.2.4. Now what 17.2.3 says? Benefit or amenities granted free or at concessional rate. So here it is in-kind benefit or amenities given to the employee would be taxed only in case of specified employees and not in case of all the employees. However, 17.2.4 says that it would be taxed, any sum paid by the employer in respect of any obligation, which but for such payment would have been payable by the assessee, is taxable as perquisite, right? So there is a distinction between both of them. Look at this here. It is benefit or amenity granted free or at concessional rate by the employer to the employee. However, here in case of item 4, it is the employer who pays for the obligation of the employee, right? So let's assume, employee is obliged to pay his taxes. Employer pays taxes on behalf of the employee. Now that is going to be governed by this particular item, IV. However, if he gives away, services as a sweeper, gardener, we've seen car, leave travel concession, medical facility, all this would be governed by item 3 here, right? So it is in-kind benefit which is covered by item 3, and item 4 covers obligation of the employee which is borne by the employer. Right, so let's assume the sweeper isn't provided by the employer to the employee. The employee employs the sweeper and the salary is paid by the employer. Now here it was obligation of the employee which was discharged by the employer. Look at this. See, if the employer provides for electricity, right? Now this is in-kind benefit given to the employee, right? On the contrary, if the employee, has a meter, electricity in his house, and the employer pays the electricity bill, right? So that would be obligation of the employee discharged by the employer, right? So that is taxable in all the cases. obligation of employer discharged by employee is a taxable perquisite in both the cases of specified or non-specified employee. It is only in case which is covered by item 3 that the question of specified or non-specified employee would come into play. Right? Do you get it? The distinction between item 3 and item 4, important. Then, any sum payable by employer towards life insurance of employee. Now, life insurance again of the employee is the onus of the employee, and therefore any sum paid by the employer for insuring life of the employee would be taxable as perquisite. Similarly, value of sweat equity shares, we've already dealt with sweat equity shares earlier. Then, any amount, the aggregate amount of any contribution made to the account of the assessee by the employer. So it's the employer's contribution now here. We've already discussed provident fund, the employee's provident fund. In the employee's provident fund, what happens is equal amount of contribution is made to the fund by the employer as well as the employee. Now, Finance Act 2020 brought in a section, this item 7 was amended and it was replaced by a new item 7 which said that if the employer contribution exceeds 7.5 lakh rupees, 7.5 lakh rupees towards recognized provident fund or NPS, that is National Pension Scheme, or the approved superannuation fund in the previous year, it would be taxed as perquisite in the hands of the employee. So let's assume employer contributes 8.5 lakh rupees towards the 3 funds here, right? So 1 lakh rupees is the amount of taxable perquisite. So if it exceeds 7.5 lakh rupees, to the extent it exceeds 7.5 lakh rupees, would be perquisite. Again, further to it, it says that any annual accretion of interest or dividend on this 1 lakh rupees, the amount exceeding 7.5 lakh rupees, would also be taxable as perquisite. Understand here, what is perquisite is only the employer's contribution, not the employee's contribution. Employee's contribution is always subjected to tax. It is out of the disposable income of the employee which is contributed to the fund, and therefore what is taxable as perquisite here is only the employer's contribution and the amount of interest or dividend thereon, right? Do you get it? Then, so value of any other fringe benefit as or amenities as may be prescribed. So this is the residual clause. We've already seen this, while we dealt with interest-free concessional loan, transfer of movable asset, food and beverages. So those all fell under the residual clause. Now, what is not perquisite? Let us check out what is not perquisite. So, medical treatment, especially, one of the very important areas which is not considered as perquisite is medical treatment. Now, medical treatment can be provided into 3 kinds of hospital. One is hospital owned by the employer himself. 2 is a government hospital. And 3, it's an approved hospital. Right? So, if at all, medical treatment is provided in any of the 3 kinds of hospital, it would not be treated as perquisite. If it is a 4th category of hospital, which is neither approved, neither government nor owned, in that case, it would be taxable as perquisite. Any medical allowance given to the employee categorically is taxable. Don't even think about it. You have to tax it. Whatever medical allowance is given. Here, in-kind benefit is given to the employee in form of medical treatment. If fixed medical allowance is given, taxable. Medical treatment is provided to the employee or any member of his family. Right? So even member of family is covered in a hospital maintained by the employer. That is not perquisite. So nothing in this clause shall apply to medical treatment in a hospital maintained by the employer. So large employers generally have their own hospitals. Government also have their own hospitals, right? So whatever treatment is given in the hospital owned by the employer is not treated as perquisite. Similarly, if sum is paid by the employer in respect of expenditure actually incurred. So reimbursement of medical treatment, right, on himself or his family member. Now, family here is an extended definition of family. So it includes spouse, children, dependent parents, brother or sister, right? So that is section 10.5. We've seen leave travel concession. The definition of family under 10.5 is equally applicable here. In any hospital maintained by the government or any local authority or any other hospital approved by the government for the purposes of medical treatment of its employees, right? So government hospital or government approved hospital, right? Any treatment is given there and the employee incurs the expenditure which is reimbursed by the employer. That is not in the nature of perquisite. Similarly, in respect of prescribed diseases, right? Now, these prescribed diseases are generally, the very serious ones. So it could be cancer, tuberculosis, or burn injuries which require extensive surgery. Now, that doesn't happen too nicely in the government hospital or the hospital owned by the employer, and therefore specialized hospital are needed. So whenever such specialized hospital is approved by the chief commissioner, the principal chief commissioner of income tax, and in respect of prescribed diseases, right, in that case, Rule 3A2 provides for the prescribed diseases. There are a whole lot of diseases. If you look at my screen here, there are so many diseases which are covered. So like skeletal fracture, dislocation, gynecological or obstetric ailment. So there are so many of those diseases which are covered, but essentially it happens in approved hospital. The medical treatment is provided in an approved hospital. In that case, any perquisite arising, any benefit arising from such medical treatment to the employee is not treated as perquisite. Right. So next is any portion of premium paid by the employer in relation to an employee to keep in force insurance. So any insurance premium, medical insurance premium paid by the employer on behalf of the employee, that is not treated as perquisite, specifically excluded, right? Similarly, so under a scheme approved by the central government, so even if it is not a scheme approved by the central government, but it is a normal health insurance plan, that is also exempt. You have this IV clause, IV here, which says premium paid by the employee to effect or keep in force insurance on health. That is medical insurance, which is reimbursed by the employer, right? That is not perquisite. Then, any expenditure incurred by the employer on medical treatment of the employee. Now, this is crucial. Or any member of the family of such employee outside India. Right now, when it is outside India, we're not concerned with whether it is a facility owned by the employer himself, or it is a government facility, or whether it is an approved facility. It is located outside India. Treatment is provided to employee or any of his family member outside India. Right? All the cost of medical treatment is going to be exempt. It is not treated as perquisite. Right? Even the travel and the stay abroad of the family members, right, employee and the family members, is not treated as perquisite. However, there is a catch here, with reference to the travel expenditure. In respect of the travel expenditure, it is exempt. It is not taken as perquisite only and only if the employee is a low-paid employee. Now, who is a low-paid employee here? Whose gross total income before including the value of travel does not exceed 2 lakh rupees. So if the gross total income of the assessee, we are talking of gross total income. So it is not just income from salary. It is the gross total income which does not exceed 2 lakh rupees. If it does not exceed 2 lakh rupees, he would be treated as a low paid employee. And there the cost of travel would not be treated as perquisite. If the employee is a high, paid properly, in that case the cost of travel is going to, expenditure of travel is going to be included in perquisite. So this is conditional exemption here for travel. As far as medical treatment is concerned, there is no such condition. As far as stay abroad is also concerned, there is no such condition. Travel and stay abroad of one attendant is also covered, right? So it is not to be treated as perquisite. So employee himself along with his attendant goes for medical treatment outside India would be exempt. However, the only condition is it would be exempt only to the extent permitted by the Reserve Bank of India. Now, under the liberated policy, there is no such, there is no requirement of permission until a particular extent. However, yet there is a clause, and the clause is that it should be permitted by RBI. So let's assume if the total medical expenditure is 50,000 rupees, and what is permitted by RBI is 25,000 rupees. In that case, 25,000 rupees would become the perquisite in the hands of the employee, right? So that is there. Then, so family for 17(2) is spouse, children of the individual, parents, brother, sister of the individual, wholly or mainly dependent on the individual. It is the extended family. We've seen all the elements of perquisite. 17(2), 1 and 2 dealt with rent-free accommodation, benefits, 3 and 4 we have discussed exhaustively. We have also shown you the difference between item 3 and item 4 of 17(2), benefit or amenities to specified employee, obligation of the employee borne by the employer. Then clause 5 deals with LIC, LIP, life insurance premium of the employee. ESOPs are covered by item 6. We've dealt with ESOPs. It is the fair market value less the exercise price, which is perquisite. Then we've got approved funds above 7.5 lakh rupees and other prescribed fringe benefits. So we've dealt with the residuary clause as well. Right? So that was perquisite. We have also seen what is not perquisite. Well, conveyance between home and office is not treated as perquisite. If a car is provided by the employer to the employee to commute between home and office, now that is not to be treated as perquisite. If the car is given exclusively to him for discharging both partly personal, partly professional, then we saw Rule 3(2), which dealt with the valuation. Then EPF, NFS, NPS, NPS and ASF, that is superannuation fund up to rupees 7.5 lakh rupees, not perquisite. Then we've dealt with medical treatment. All the areas of medical treatment were covered. Health insurance policy, I told you, if the employer takes up health insurance policy of the employee, that is not treated as perquisite. Right. Next. So this is what perquisites were. Let's move on to deduction very quickly. Under the deductions, we don't have too many deductions under this head. We have very few deductions here. Section 16IA deals with standard deduction. So a standard deduction is provided to the employee out of his salary income, and that is to the extent of 50,000. 50,000 or actual salary, whichever is less. So virtually, practically all the employees take benefit of this standard deduction, and a complete 50,000 rupees is allowable as deduction out of the salary income. Flat deduction of 50,000. Earlier there were a couple of other allowances which were exempt. Those were removed. So transport allowance was exempt to the extent of 19,200. Medical reimbursement was exempt to the extent of 15,000. Now that was withdrawn, and a standard deduction of 40,000 was introduced. Thereafter, it was increased to 50,000. For your examination, 50,000 rupees is the amount of standard deduction. Entertainment allowance is deductible only in case of government employees. So no other employee can claim entertainment allowance. So practically not too relevant, because government employees no longer get entertainment allowance, and the benefit of 16(2) is available only to government employees. A sum equal to 1/5 of the basic salary or 5,000 rupees, whichever is less, or the actual entertainment allowance received. Right. So that is going to be deductible. Next is important, professional tax. Now, professional tax or tax on employment, which is payable by the employee, right, on his employment, that is allowed as deduction. Now, generally, when you talk of state of Maharashtra, we've got a professional tax of 2,500, which is collected from each of the employees. Now, if that is paid by the assessee, only then deduction would be claimed. Else, no deduction would be allowed, right? And the maximum, what the states can do, the maximum amount of tax which could be collected by them under Article 276(2) towards tax on employment is only rupees 2,500. So 2,500 of maximum amount could be collected, right? Not beyond that. So maximum deduction under this, item 3 is also around 2,500. However, it might so happen that assessee pays arrears. So he pays professional tax for a couple of years together in one single year. In that case, in the year of payment, it would be allowed as deduction. Let's move to the last concept for the day, and that is relief. Section 89(1), relief in respect of arrears or advance of salary, right? What happens is, we'll talk of arrears. What happens is an assessee who's, there's an employer and there is an employee. Now the employee is working for the organization and he's also seeking a hike, a wage hike. However, the employer is negotiating with the employee, and this is not unusual. It is a normal practice. The employer negotiates with the employee about the hike. Generally, even in the government organization, you've got the pay commission, which are established. And based on the pay commission recommendation, retrospective effect is given to the hike of salary and paid to the employees of the government. Now, when they are in negotiation, there is a considerable lapse of time. Let's say, the negotiation are taken place for over a period of 2 years. Now, once the negotiation are complete, what happens is the employee gets a wage hike from the employer with a retrospective effect, right? So last 2 years are covered, right? Now, in last 2 years, let's assume this employer has received 50,000 rupees of salary per month for last 2 years. However, on account of negotiation, he gets a hike of 10,000 rupees per month for last 2 years. Now, once he gets a hike of 10,000 rupees per month, he will get 2,40,000 rupees, right? So last 2 years in the current year itself, right? So not only he gets 60,000 rupees for the current year, but in addition, 60,000 rupees per month for the current year, but in addition to that, he also gets arrears or worth rupees 2,40,000, for the preceding year. Now, when he receives this arrears, we dealt with arrears in section 15, wherein we saw that it is taxable in the year of receipt, if at all it is not already tax paid. So, in the year of receipt, it would be taxable. Now, what happens because of this? Because of this, all of his, calculations would go wrong, because not only does he receive 60,000 rupees per month, but also receives a consolidated amount of 2,40,000, which makes him move to another slab of income. We have got a progressive tax structure, and therefore his slab of income might increase. In order to give relief in such cases where the arrears are taxed in one single year completely and the assessee loses the benefit of the slabs of income, relief is prescribed under section 89(1). Now, 89(1) relief is also available in respect of gratuity and commuted pension. We're talking of arrears for the time being. Let's see the logic of this. Now, how does it work? How does the relief work? See, here's this employee has got the entire salary along with arrears in the current year, right? So, you have to calculate tax on the salary including the amount of arrears for the current year, right? So my current year salary would include both the regular salary as well as the arrears, and I compute tax onto the entire sum. Now, had I not, assuming that I did not receive the arrears, if I did not receive the arrears, hypothetically assuming, I would have paid X amount of tax. Just because I have received, arrears, I have to pay Y amount of tax, right? I have to pay an increased tax. And therefore, what I do is I would find out my incremental tax liability due to arrears. Now, how do I find out incremental tax liability on the arrears? It would be my salary plus the arrears tax thereon, which is Y, minus, tax on salary alone, which is X. So Y minus X is my incremental tax liability. So I have paid Y minus X as tax on arrears. I know that. Now my next question is, what if the arrears were received in those respective years? If the arrears are pertaining to 2017-18 and 2018-19, let's assume that. Now, had these 2,40,000 received in those respective years, 1,20,000 each year, what would have been my tax liability? I compute that. I have paid X amount in 2017-18. I have also paid X amount in 18-19 as tax. Had I received these arrears in those years, I would have paid Y amount, So my incremental tax liability of those years, I compute that. So let's assume, my incremental tax liability in this current year is, say, 1 lakh rupees. And had I taxed this 1,20,000, that is 2,40,000, in those respective years, I would have paid an incremental tax of 50,000. Right? So my relief here is 1 lakh minus 50,000. That is 50,000 rupees of relief is something that I'll get. Let me show this by way of an example. Right? You will understand it in a better way. See what happens. In case of Mr. Hari, who turned 68 years on 28/3/2021, you are informed that salary computed for the previous year 2020-21 is rupees 10,20,000 and arrears is received is 3,40,000, 3,45,000. So what you have received is 3,45,000 rupees of arrears, which are spread across the 3 years, right? So look at this. 1,03,000, 1,17,000 and 1,25,000 all together make 3,45,000. Now these arrears are related to these respective years, 2010-11, 11-12 and 12-13. All the arrears have been received in 2021, right? Compute relief under section 89(1). What is given to us is the slab rates. Now this would be given to you in the problem. You don't have to remember these. They are there. What is given to you is, resident individual of 60 years or more, or other resident individual. So you will have to find out when he crosses the 60 years mark, right? So he's now 68. When does he cross 60 years of mark? You'll have to apply the slab in the first table. If he's not crossed 60, you have to apply slabs in the second table. So that remains arithmetical in nature. Let's understand the concept. Arithmetics is something that you could work out. This is a problem from a module, right? Now, so you now know that he's in receipt of arrears. So first and the foremost thing, you are going to calculate tax on income inclusive of the arrears. So I'm just going to find out the tax on income which is inclusive of arrears. So if, what is he paying now? So he's paying tax on 13,65,000. 1020 is the salary which is already given to us. Look at this. 10,20,000 is the salary which is already given, computed. 3,45,000 is the arrears. 13,65,000 is the taxable salary. tax thereon at the rates prevailing in AY 21-22 is 2,28,280, including higher and education, health and education cess, right? Including HAC. Right? So it is 2,28,000. What if he did not receive the arrears? If he did not receive the arrears, he would have paid 1,20,000 only, right? So his incremental tax liability is, because of the arrears, he's receiving an increased amount of 2,28,280 minus 126,40. So what he's liable to tax on the arrears to the extent of 1,07,640. Understand this. He is going to be taxed on arrears to the extent of 1,07,640. So that is the amount of tax he ends up paying. Now, had these arrears received in those respective years, what would have happened? Let us check it out. If he would have received, for 10-11, he would have received 1,03,000. For 11-12, he would have received 117. And for 12-13, he would have received 1,25,000. Look at this. His total salary is given to us. His total salary without arrears is given to us. Because he did not know in these years that he is going to receive arrears. And therefore, his taxable salary is no. See, look at the taxable salary. Including arrears, it would be 8,13,000. He had paid tax on 7,10,000 only because he did not know about the arrears. Right? So he had paid 78,280 in that particular year, that is AY 11-12. In AY 11-12, that is previous year 10-11, he had paid tax as per the rates prescribed, to the extent of 78,280. Had he received arrears then, he would have paid 1,08,37. Similarly for 12-13 and similarly for 13-14. Now therefore, he would have paid an incremental tax of, 1,08,37 less 78,280 plus 1,38,638 minus 1,02,485 plus 1,51,925 minus 1,18,450. Right? So that would have been my incremental tax in those respective years. Now I got to check whether my incremental tax of the current year, which was 1,07,640, is greater than the incremental tax in these 3 years. So if it is so, if the current year incremental tax is greater than those respective years, then would I be entitled to relief? If it is not so, then there is no question of relief. Let me check it out. See, look here, my incremental